Good afternoon, everyone. I'm Susie. Now I'll briefly introduce our company and the accounting standard related to our topic. Here we run a bookstore named Ace Bookstore. It's a merchandise company, and we buy math textbooks from our suppliers, Price China, Price America, and Price Japan, and then sell them to our customers, CUHK, HKBU, and HKU. The company started business in the year 2012. At first, we need to determine what costing method we should use. Our inventory summary is like this for the year 2012. As we are a new company, there was no beginning inventory on January the 1st. And on February the 1st, we made the first purchase. That is 500 books for $20 each. And the second purchase was placed on June the 1st. That is 400 books and costing $25 each. However, we found that 50 of the second purchase turned out to be of poor quality, and we returned them 15 days later and got full refund from our supplier. On October the 1st, we sold 600 books to our customer CUHK, and the price we charged was $35 per copy. Among the 600 books, 30 was found unsatisfactory by our customer. So CUHK returned them to us, and we gave full refund to CUHK. And at the year end, there was 280 copies on hand. So, according to Hong Kong Accounting Standard 2 inventories set by Hong Kong Institute of Certified Public Accountants, in its paragraph 34, it says that when inventories are sold, the carrying amount of those inventories shall be recognized as an expense in the period in which the related revenue is recognized. So to see what it means, let's first look at the journal entry of our sales. When books are sold, here we debit account receivable and credit sales revenue to report sales. Then, simultaneously, we debit cost of goods sold and credit inventory to mark the expense of giving out our inventory. So in our case, on October the 1st, when different cost methods are used, the sales revenue is the same. That is 600 times $35 each, which is equal to $21,000. However, the cost of goods sold will be quite different in different methods. And also, what does it mean by cost? HKAS says in paragraph 11 that the inventory, cost of purchase of inventories comprise purchase price, taxes, transport, and handling fees. So in a word, costs directly attributable to the acquisition of finished goods, materials, and services. And in our case, we will include transport cost as part of cost of purchase of inventories. Well, in 2111 class, we learned there are 4 costing methods. In our case, as all books are ordinarily interchangeable, the specific identification method does not apply. And also, HKAS does not permit last in, first out method. In paragraph 25, it says that an entity shall use the same cost formula for all inventories having a similar nature and use to the entity. So here we are choosing between FIFO method and weighted average cost method. According to HKAS definition, FIFO formula assumes that the items of inventory that were purchased or produced first are sold first, and consequently, the remaining inventory will be the items purchased or produced most recently in the period. So in our case, among the 600 books, 500 copies were from the first purchase and 100 were from the second purchase. HKAS also gives a definition of weighted average costing method. It says that we calculate the weighted average of the cost of similar items at the beginning of the period, and also the cost of items purchased or produced during the period. The average may be calculated on a periodic basis, or it can also be calculated as each additional shipment is received, depending on the circumstances of the entity. In our case, we calculate the weighted average cost for each item at the end of the year. So it's around $21.99 per copy. And alternatively, we can calculate this weighted average cost as each additional shipment is received. But as our case is a simplified one, the above two calculating method does not make any difference. So now let's pass to my teammates to introduce how to use MYOB software to record our transaction.